Well, remember what I said yesterday about we'll have to see how well the market holds up today, uh, given that there's an inflation report coming tomorrow. Well, it was not a good day, to say the least. Let's follow the progression of events according to what's happened so far, and then even extended into tomorrow based on what I think is going to happen. We'll confirm it tomorrow, but I suspect things are pretty obvious so far. We will see tomorrow whether that's true. Basically, what it boils down to is that the market, the stock market, has been in a trading range for several days, with one brief but very substantial spike below that trading range recently. And yesterday, the market came down hard and then hung on for dear life, trying to make sure it didn't go below the low of the previous trading day of trading range of recent days. Okay, and did hold up through the end of the day. The problem is that as has happened so many times in recent times, the market promptly plunged down the next morning, this morning. Okay, so once that happened, the market spent much of the day just trying desperately not to go below the low of that spike down below the previous trading range that I just talked about momentarily ago. Okay? The problem is that in the afternoon, especially late in the afternoon, the market did drop below that level and at an ever increasing rate, and then kept right on going down. The bottom line is that the market started going down, accelerated down, in the end sliced through that level of that spike, recent spike low, like butter, like a knife through butter, as the saying goes, okay, and kept right on going and kept going down for the rest of the day. Okay, the market closed nearly at bottom tick this time. It's a reference to a couple of days ago when I noted it closed at top tick the previous afternoon, once again trying to squeeze every last drop out of the market, only to have it collapse completely right away the next morning again. It collapsed completely right away this morning again too. Okay, but this was based on the market being on the low the previous day, so then they were fighting to avoid the even lower low, which they then proceeded to not do, i.e. fail on this afternoon. The market cascaded down, and given the fact that the inflation report tomorrow morning is not likely to be good, if it isn't, this market is likely headed much lower yet tomorrow. If the inflation report is not good, it can turn into yet another very ugly Friday, like a few Fridays recently have been. That is unusual historically, but not lately. Okay? The market has been at a very critical juncture, and it is failing the test. Failed it very thoroughly this afternoon, and there's a very good chance it'll fail it very thoroughly tomorrow. Okay, if so, it is going to be a very bad week on the weekly bar. Okay? Quick additional notes. Germany as a reference point for Europe in general. Europe was down again. Okay? Germany came down hard this morning already. Okay? Probably based on yesterday's difficult trading on Wall Street. And it still was above 14,000, but just barely. And since the European markets close for the day a couple of hours after the American market opens, chances are if the inflation report is bad tomorrow morning, okay, it comes out before the American market opens, okay, and the American market starts going down more in response, it will certainly drag the German market below 14,000 and probably well below 14,000 before they even close for the day tomorrow. But we will see about that. A couple of other markets that played into it. Oil prices continue to remain high. Gasoline prices keep going higher, okay, as a result. Interest rates also continue to climb higher again. They are now significantly above 3% again on the 10-year Treasury note benchmark rate, benchmark market rate, as opposed to Federal Reserve interest rate, okay. And basically right back at the highs they achieved previously. So the interest rates continue to ratchet higher and will probably be at new highs for the entire move very soon. Wouldn't be surprised if that happens tomorrow already at the rate interest rates have been going up. Okay? So the mark, as I said, I believe yesterday, in yesterday's video, the pressure continues to be there. That will not be helpful for the market. And I said, therefore, I expected today not necessarily to be a particularly good day. That turned out to be putting it mildly. Okay. Not only did the pressure continue, but the market reacted accordingly in no uncertain terms by the end of the day. This is not a good way to go into the inflation report tomorrow. So we'll see what happens as a result of that. But the bottom line is the multi-day move so far, especially if it includes tomorrow, will not be good at all. It certainly isn't so far. Okay? So it's likely to get very, shall we say, tricky very soon overall. I have a feeling next week is not going to look very good, but we'll see for sure what happens there when we get there. At any rate, in the meantime, it's dropping harder and harder and continues to go down. It is now, as of the close today, the American market is now well below all previous recent lows. In other words, the downtrend is continuing in no uncertain terms, and I suspect that that tomorrow won't make that situation any better. I suspect the inflation report is not going to be great, and the markets will react accordingly. I will add that the reports are that the housing market is also beginning to slow down. No big surprise there, but that will contribute to the situation overall in the bigger picture. Main part of the reason why I want to mention it, I mean, it's important to the bigger picture to begin with in terms of the way things are going economically, but in particular, in normal times, the housing market should be picking up in the spring going into the summer. That's the seasonal pickup time. But just like happened one previous time years ago that I remember altogether too well, when the market had been booming and burning in the positive direction, going gangbusters, going like crazy for well over a year straight, going right through what should be the normal time of the normal slow time of the year, and the holiday season and the early part of the year and so forth, and blowing right through it, and in this case blowing right through it even the following year, namely last 6 months or so. Okay, when that happens, sooner or later, the housing market is going to crash into a brick wall in terms of demand overall at a time of year when it should not be doing so, when the opposite should be happening. In other words, going into the spring and summer. Okay, and given what's happened so far along the way, I fully expected that to happen, to hit sometime in the early to mid part of this year. The reports so far indicate that it is very much happening. It is very much hitting that wall. Prices aren't coming down yet per se, but demand is definitely slacking off. Between the combination of sky-high house prices in the meantime, especially with what's happened recently, plus increasing interest rates, it has quite literally priced a lot of people out of the market, that people simply can't afford it anymore. Okay? The last time it happened, they simply ran out of buyers. This was many years ago. Okay? They simply ran out of buyers in the spring because they'd been selling so many houses all along the way already that eventually there just weren't any people left who wanted to buy a house who could. It wasn't that affordability wasn't the biggest factor back then. The issue was simply that they'd sold so many houses that they had run out of people who wanted to buy a house who could also still do so. Okay? In other words, they've gone all the way down the ladder until they hit the pool of people who couldn't do it anymore. This time around, it is actually kind of the other way around, that house prices and interest rates went up so much that even many people who could afford a house a few months ago and wanted to buy one and were simply being outbid every single time, because in recent times most houses on the market have received multiple or even many bids on them. Okay, in other words, most of the people who bid on the house came up empty. Okay, so they went and bid on another one, and then bid on another one, and then bid on another one, and were kept getting outbid over and over again. Those are the people who now can't afford a house anymore. Okay, so it's this last time around they ran out of buyers. This time around the housing market got away from the buyers. The buyers who wanted to buy can't afford it anymore. Okay, end result is the same difference. Okay, so we'll see how that plays itself out near term as well. But anyway, that's where it's at for now. We'll see what happens tomorrow and go from there. But so far it is not looking good at all, as I expected would be the case, which is why I'm doing these videos in the first place. Things are happening the way I expected they would. Not the way I would want them to go, who would want it to go this way, but after all, the channel is called The Way the World Actually Works. In other words, I'm dealing with reality, with the way things actually are, trying to counteract wishful thinking. In other words, thinking that is not in touch with or in sync with reality. And we will go from there.